Good afternoon, everybody. Today I'm chatting with Tim Clark from Fury Gold Mines. In this interview, we discuss the gold market, where Tim thinks the gold market could be heading, and those events that could lead to a potential spike in the price of gold. We also get into the company's large position in Dolly Varden, which, when you factor into the company's current market cap, gives them an enterprise value of around $10 million. Which you could think of it in two ways. You could think of it as, hey, you got these great gold projects and an option on Dolly Varden, or vice versa, an option on these great gold projects and a position in Dolly Varden. We also discuss the cap table and how Tim's gone out and built a shareholder base in the US, which is a little bit different from some of the companies that we see that are listed in Canada, but they also do have a listing on the NYSE. But still, I think that it's kind of interesting how they've gone a different route to build their shareholder base than what we typically see with a lot of the companies we speak with. All right, everybody, enjoy the interview. Tim, thanks so much for joining us today.
Hey, Steve, how you doing? Great to see you again.
So I've got to ask, you're running a gold company. You've got some pretty nice assets, I can see. But the first question I got to ask you here is, being in gold, I'm sure you wake up every morning, you get out of bed, and there's things that you think about that get you excited about the shiny yellow metal. What is it that you think about when you get excited about the future of the gold market?
That's a great question. I mean, it's funny. I was in an industry in the capital markets. I could have gone anywhere, and I actually leaned into the healthcare and biotech before anything else. And then obviously matriculated over time into the mining with gold. And I think that there's some people who are just gold buffs out there who are permanent bulls on the idea. I like it because I majored in macroeconomics, microeconomics in college. I did finance and accounting in grad school, but my first sort of understanding was just big trends. And there's inflation, and one of the top investors in Boston, who I used to cover for years and years, ran a company, and he points out when he was in college, he was paying like $500 for college, and now his kid is paying $65,000, or his grandkid pays $65,000, and that's going to happen over time, and gold is always going to be a currency. I know the knock on it is you really can't use it for more than sort of minor stuff, but it is a currency at the end of the day, and there's only so much of it. And I think that when the world sees turmoil, when they see inflation, they're going to turn to it. And right now, it's been managed, and it's been manipulated by the Fed in terms of their rates and whatnot. And I think that it's very poised to turn back when we see that first rate drop. And gold is held up, but I think if we can get that pop, you're going to see a lot of money rushing into the equity market.
So I hear that a lot, that gold's manipulated. When you say that, what exactly do you mean?
Well, it's just they're using interest rates to control inflation, and the money supply is out of control, and our debt is out of control, and they're using financial lending abilities in the government, as well as the interest rate that they're setting to keep the dollar high. And when the dollar's high, gold is not viewed as good a vehicle. A lot of individuals right now have their money in money market accounts, and they're making 5.5%, and that's a great investment. 5.5% right now with no risk, but it's not going to stay like that forever. What I understand, and when I talk to my relationships on the street, at the institutional, and even at the high net worth level, there is a ton of cash sitting on the sidelines right now. They're just waiting for an excuse to put into the market in various different types of vehicles. Right now, when I look at the gold industry for the juniors specifically, it is at its all-time low in terms of valuation. Companies are going out of business, and in my view, it's not a sector that's going out of business. So if you can survive, or even capitalize on the situation and buy undervalued properties, this is the time to steal real upside.
I want to go back to what you said earlier about your friend who said that college was $500 and today it's $60,000. It's actually a tweet that went out by Peter Schiff yesterday that is really relatable to that, where he made a comment about how when the US government got into the lending business for colleges, they kind of realized that they could charge students whatever they wanted to. And that sort of mechanism gave students sort of this idea that, hey, I have to go to school. This is just what it costs. And I don't have to worry about a credit rating or somebody looking at the fact that I'm paying $60,000 a year to study fine art. They're saying that I'm good and I can get the money. So colleges, they kind of realized, hey, we can charge this. The government's going to make sure that the funding's there. And suddenly we wake up in the whole economic model of colleges in the US just doesn't really make a whole lot of sense, does it?
Well, it's interesting. I mean, I went to college, but my brother didn't, and he's a carpenter, and he has a very good business. And I used to think when I was in Wall Street, I was lucking out, but the reality is your life on Wall Street, it doesn't last forever, and those jobs go away. And yet you always need a carpenter. You always need a plumber. You always need a doctor. And maybe you have to go to school to be a doctor, but trade schools are excellent. And if you look at where colleges are right now, it's a lot of men are dropping out. They don't have, it used to be a lot more men than women in college, but now it's the reverse. And when it comes to paying for it, when you're young, you just follow the crowd. And that's what most people do. They follow the crowd, and you jump into these things where it's expensive, and you assume your parents or grandparents are going to pay for it. Or if you have a loan, back in my day, you didn't have to pay the loan back. You could declare bankruptcy and walk away from it. And they cut that off. But, there's a lot of pressure. And I still think going to college is the right thing to do for a lot of people, but not for everybody. But when it comes to inflation, the colleges are inflating at a faster rate than I think everybody. And if you even compare it to the gold funds now, the reason why the large caps like Newmont and Barrick and Agnico haven't popped as much, gold price is actually really high right now. It's near its all-time high. So what's wrong with these gold companies? Well, the problem is the margins haven't expanded because inflation. It's all the underneath costs that are going through the roof. And you can track oil for that, because oil, you can watch oil go up, and you can see the influx there because that's a big cost for them. But we're constantly fighting right now. There are companies out there that it's really not the inflation. They're just trying to gouge in the inflation environment. And I think a lot of that needs to come back and get re-rated down. But look, again, going back, we're here to talk about the gold bullion industry. The dollar is losing its credibility in the global market. Asia would love to take it over. And I think that if you look at what they've been doing, they don't sell gold in China to the world. They don't sell it in Russia either. They keep it. They're hoarding it. Why are they doing that? Well, I think it's because gold is going to continue to go up, and they have a 100-year view of it, and we don't. And I think if you look at how hard it is to find new gold, it's becoming increasingly tough to find the big targets. And I think the big companies are going to have to figure that one out, because you're not going to have the giant production that they had. Now you're going to have to figure out how to find smaller mines and make them more economic. And this is where I think something like, and then not to promote what we're doing, but that's what we're here for, is Eau Claire mine at Fury. One of the reasons why I think it's really attractive is because the infrastructure is already set up. You got your roads and you got your power, and a lot of places don't, and makes it really attractive.
We'll get into Fury Gold in a minute, but I just had sort of a thought-provoking question from what you just asked, which is this idea that we basically created this entire debt-based economy where whether we're talking about student loans or real estate or businesses. And suddenly we've got this unbelievably aggressive rate hike program that's going on. And it makes you wonder how long the economy can actually sustain such high rates, and until we see the Fed have to suddenly backtrack because they've just broken a bunch of things in the economy. Do you think that that's a potential big catalyst that we're going to see for gold over the next couple of years?
Well, look, I think for me, I'm pretty confident rates are going to come back. I think you kill too much business, and the U.S. government in particular thrives on its ability to create businesses to compete from a global point of view. If you don't have a capitalistic system that creates wealth and growth in industry, you're going to lose your world power control, and then you lose a lot of benefits with that. So they're going to be very careful, especially coming up with the elections next year. And I think there's a good chance for rates to come down in front of that. The question is, it's not about if it's going to come down, it's just when. I think that's what a lot of people are hesitating getting into the gold industry. They're just going to wait, and when they see that, it's going to pop. That kind of investing is, I get it. It's a time value money. You don't want to put money in there that's going to sit there for a year waiting for rates to drop. You'll just wait, and then you put it in. But I think that rates are going to come down. I don't know how fast they'll come down, because I still think there is inflation, and they're going to want to fight inflation. But at the same time, every year that you're up here at 5 or 6%, I mean, there goes your salary. They're not popping salaries to meet inflation in most circumstances, and I know that's not in my case either. So I think it's going to be, it's going to be coming on us. It could be 6 months, it could be 18. I don't know, but I think we're going to be ready for it, and it's going to be really interesting.
I agree. That's my exact sentiment on how things are likely to play out. It's inevitable that things are going to start blowing up everywhere if we leave interest rates here. And it just makes me think back to the beginning of COVID, when Bank of America came out with that $3,000 price target on gold, and then they later retracted that. But I think that they were right. They were just a little bit too early. And now we saw the inflation, but then we're going to see that there's really not as much credibility on the Fed's part to be able to rein that in without blowing up the entire economy. So I fully agree with your sentiment.
Yeah. Well, thank you. And it's interesting now. The gold's up as high as it is. The percentage moves are different. $100 move is not as big a deal as it used to be. And you could see this thing go up a lot faster than $100 at a clip.
So let's get into Fury Gold Mines. This is the first time we've had you on. Can you give us a high-level overview of what the company owns and sort of what the mission of Fury Gold Mines is?
Sure. Well, look, I mean, I came in here 2 years ago as CEO, a little over 2 years, and I came from a background in capital markets. And the first thing I liked about the company when I joined the board was it was Canadian focused. I do think that the geopolitical risk out there is meaningful. Whenever I brought a company in to see an investor in my previous job, first thing they said is, "Where are you located? Where are you located?" Simple question. Being in Canada is great from 2 points of view. One is it's a pretty politically safe region. Plus, where we are in Quebec, where we do most of our drilling, is probably one of the best jurisdictions in the world, where the government literally helps subsidize a lot of your drilling. So if we go out and raise money, we can get a 75% premium on all our drilling within Quebec. It's a program that's been there to help promote business and development, and it's worked. And so we're hyper focused on that. Where we also have properties. One is called Committee Bay. It's a 300-kilometer greenstone belt up in Nunavut. It's about 150 kilometers northeast of Agnico's Meadowbank and Amaruq mine. And then we used to own a property called Homestake Ridge. But when I came in as CEO, the first thing I did was I decided that it was important to simplify what we were doing. We were trying to drill 3 properties. It's awfully difficult to manage as well as raise money, especially in that market. And I saw an opportunity to sell the property to Dolly Varden Silver. They own the property right below us, and they had a great group, a management team, a very skilled geological team, and they were able to take that and really start to accelerate it. It gave us the flexibility to focus on what we're good at, which was out in Quebec. And so we own actually right now about 45 million in equity of Dolly Varden Silver, which was about 75-80% of our market cap. So from a holistic point of view, what you're getting with Fury is for a very small enterprise value of less than $10 million, you're getting a company that's highly exposed to a takeout target. With Dolly Varden is a takeout target with Hecla Mining, in my view. Hecla went from 10% to 15.6% ownership in the company. They own 90% of the property around Dolly Varden. Plus, you get with the other asset we have, Committee Bay in Nunavut. We had a big discovery up there just before we actually stopped the mining because of the market. But it's got $160 million invested already. It's not worth zero, but we're getting zero credit for it. And you're getting in Quebec, you're getting essentially Eau Claire, which used to be called East Main Mines. And we've revamped that. We've drilled it out for 3 years. We've got a big resource called the Eau Claire resource. And then we've got a project to the east called Percival Project. And that's 55,000 hectares of land. And then just to the north, we also have a joint venture with Newmont called the Eleanor South Joint Venture. It sits right below the Eleanor mine up in James Bay. And so from my perspective, you've got a lot of options and levers to pull to have success in a market that's pretty washed out. And we have, in my view, best in class financing because we own so much of the Dolly Varden company that is potentially monetizable.
So what's the plan with the Dolly Varden position? Does that give you guys access to better financing? Do you think that you're just going to sit on it and wait for it to get taken out? Is there any sort of strategy there with that equity position?
No, listen, a lot of this is just common sense. It's Hecla just went from 10 to 15 or 16%. They like the story. They've been up to the mine many times. I was up there with the CEO just 2 months ago, and I know they like it. And their guys have been in the data room for a year and a half together, and they're thick as thieves in terms of the geologists. It's what you want to see when a company gets interested in coming in. And what I think is going to happen is if they start getting good grade, you're going to see Hecla, you get even more excited because Hecla wants to get bigger. And it's a silver resources are hard to come by. Our position, we have 23.5% of the company, 2 boards on the seat, including myself. And I see upside. So for me, I don't want to sell it right here because I think the stock price is going a lot higher. But at the same time, I'm also prudent, and I'm not going to sit there forever and have 80% of my company run by someone else.
Would it be almost fair to sort of look at Fury Gold Mines as a project generator in the sense that you guys have lots of really credible projects and you guys have had this success by effectively spinning out into Dolly Varden, and that's been tremendously successful for the company. Is that something that we could see you guys do with some of your current gold projects?
Listen, absolutely. I mean, look, someone asked me the end game the other day. What's your end game? And I think everybody in the junior space, the view is you're supposed to be taken out by another company. And in my view, sure, that can happen, but we've got a lot of different projects. One company might not come into Eau Claire and say, well, hey, we like Eau Claire, but we don't like Committee Bay, or vice versa. I think it's a way to manage your portfolio is to keep advancing each of your assets as best as you can to the point at which does it make sense to keep it or sell it. And the goal I don't want to build Eau Claire. That's not our skill set. Our skill set is exploration. So my goal is to build out Eau Claire, build out the project, show that there's a path to success for a company to actually become a development company and produce in that area. And then you take the money that you would have gotten instead and go find something else. That's what we're really good at. In fact, when I sat down with Agnico, they asked me, what do you want to be in 3 to 5 years? And I said, well, what do you want? To have a company like me? Would it make sense for you to have a really good exploration company aligned with you? And they said, we were hoping you'd say that, because yes, we do. They don't want to invest in a company that just wants to stay there and produce it. So look, all things are on the table. Do I see opportunity? I see opportunity to consolidate at these right now in this market. If there's something interesting that is attainable that I wouldn't get in a better market, I have the cash. Why wouldn't I deploy some of the cash? If I have something that I think is not going to be aligned with the rest of our business, and some company wants to come in like Committee Bay and do a joint venture with us, great, because they can bring a real benefit as a big producer. You're not only bringing cash to the table, so you don't spend all your money doing the exploration, but you have a natural buyer at the end of the day. As for Dolly Varden, well, my goal is to get that monetized at the price that adds the most value to my investor. And as a board member of Dolly, I have to wear that hat in terms of responsibility. But at the same time, I'm excited by what's happening with Dolly. I mean, Dolly it's just trucking down the line. I mean, when investors see that a company is coming in not a first time, but a second time for more money after taking a big look, they should get excited about the stock. And in this market, I think the same thing with drill results. Right now, drill results aren't doing a lot because no one wants to be the first one to dip their toe in the water in a bad market. That's pretty scary. But when it turns, the ones that do are going to have exponential returns because they're going to get in at a much lower price. There's not a lot of liquidity in this market, and you won't be able to get in. So it'll be interesting to watch. And like I said, the portfolio managements of this, I used to cover these big accounts in the U.S., and they always had to move first because liquidity issues were a huge difference. Buying at 25 cents going to 30 wasn't nearly as profitable as buying at 15 cents going to 30. You know what I mean? If you do the math. So they needed to get in and move early. And I think there's some good companies out there, but when you look at the junior market, a lot of them, frankly, are probably going to go away in this market, and it just eliminates the choices for you.
And it gives someone like yourself an opportunity to go buy a project that somebody's spent tens of millions of dollars already drilling out for pennies on the dollar.
Exactly. I mean, this is between you and me, like we should be diving in, buying everything right now, because when we come out of it, it's going to be worth a lot more money. And the hard part is it's a lot harder to buy stuff than you think it is, because there's a lot of political issues with the companies, and there's stuff that you don't know that you can tell that's not being divulged, and you got to be really careful. Right now, what investors want me to do is, well, first they were really asking what are our drill results, and now that we got really good drill results, it's sort of like, well, we don't want you to spend a lot of money because we won't want you, and we don't want you to raise a lot of money and dilute our share price. And I get all that, but at the same time, I got to be prudent. And if I see opportunity to sell some Dolly shares and buy something interesting, or we do, you really can't do an acquisition in this market because all the share prices are just blown up. I think you can do acquisitions if you're equally pulled back in the stock price, but I think for Fury, we are so undervalued because people are looking at the Dolly, and that's what they're trading on. So our enterprise value for the rest of the company is like nothing. It's literally like buying Dolly and you get an option on Fury for free. And I'm surprised that one of my biggest worries is a company will come in here and just buy me out before I can just revalue it the way it's supposed to be. And we're all taught eventually price discovery will reward you for the value you've created. Well, the stock price has been more than cut in half in 2 years since I've been here. And we've done nothing but shore up the capital in a massive way. We've gone to probably one of the top 3 financeable juniors out there. And we've advanced our targets not 1 year, but 3 years. And we've developed relationships with some of these bigger producing companies. The company's innate value is really substantially doubled or tripled since the stock price has been cut in half. But I can't make an acquisition now because my enterprise value is lower than the quality that I would be buying. The only thing I could use is cash to buy something right now, and then we haven't found anything we love yet. But we've got plenty to drill, and we're in good shape.
One last question I've got for you here is something that I know a lot of shareholders get anxious about in the Canadian junior markets. As I'm sure you have seen a lot of things happen out there, is the capital structure of a company and the investors that are in the company, and ultimately what the company's looking to do. Now, I know in your case, Fury Gold has got some really impressive shareholders. Maybe you could speak a little bit to the capital structure of the company and some of the shareholders that you guys have.
Sure. So the company is 2/3 retail in the U.S., or actually 2/3 of its retail, of which 2/3 of that is in the U.S. And then we've got some high net worth individuals that own, say, 10% or 15% of the company. And then we've also got Agnico Eagle, that they took a position in at 2.5%. And then we've got I'm not supposed to mention the name because they just don't. For marketing reasons and disclosure reasons, I'm not allowed to. But it's probably arguably the number one mutual fund company in the world, in the United States. So someone can figure that out pretty quickly. That's based in Boston, and they have 7.5%. And the reality is those guys are long-term owners, and so are there's the high net worth or long-term owners. They have enough stock that they're not going to be selling into the market because they would just kill the stock. And so what the reality is most of the money out there for gold is really in the United States and Europe, but predominantly in the United States. It's not Canada anymore. It's interesting. The type of people that trade the stock is there are those who buy it in September and sell it in February after the drill results come out. But the majority of the guys I talk to that buy into gold are longer term. And what they're waiting for is a cycle. They're not looking for a trade. They're looking for a longer term cycle. They have a big portfolio. They don't mind sticking, $5 million, $10 million bucks somewhere and letting it sit for 5 years. And because when it pops, it's going to be, a 5, 10 bagger. That's how they look at it. And to make the small term trades really doesn't generate a lot of upside for them at the end of the day. So that's what it looks like.
Hey, well, Tim, thanks for hopping on here. I think you got a really exciting project, and it's nice to see someone who's working out of the U.S., building a story out of Canada and an investor base, sort of out of. I know you guys trade on the TSX, but going out and telling that story away from the Canadian junior markets, which in my view have become pretty swampy of late. So I think you're kind of thinking about it differently, and it's sort of a breath of fresh air to see someone who's going out there and working a whole new shareholder base for a Canadian gold company. So I congratulate you on all the success you've had so far, and we look forward to seeing how the story evolves over the coming quarters.
Yeah, Steve, no, listen, I've enjoyed meeting you guys, talking with you guys. And, we are listed in Canada, and we do have a fair amount of Canadian following, but we are listed in the New York Stock Exchange, which can be a huge lift. We're one of the few that do. It's very expensive, so most don't. But we feel that being aligned in the markets that can really provide leverage is going to help in the long term. So I appreciate the notice, and you enjoy your day.
All right, everybody. Thank you for watching. If you enjoyed this interview, please do me a big favor and smash that like button, subscribe, and ring that notification bell. Also, let us know what you think in the comment section. All right. Thanks, everyone.